So when strategy is accumulating more and more and more Bitcoin, you'll hear critics say, how can they keep this up? Again, initially it was 500 million, then 2 billion, then $2.5 billion for Stretch that Saylor's making available. And he will raise that $2.5 billion and use the majority of it to buy Bitcoin. When he does these things, there's been a lot of questions from people who say, how is he going to afford to pay out 9-10% interest when he raises this money from investors, and then he pays them out these dividends of 9 to 10%? A portion of the money he uses to buy Bitcoin, and the portion of the money he uses to pay out dividends to his investors. So there's not a concern or a consideration on Saylor's part or his company's part on whether they can pay out the returns and dividends to the actual shareholders. The other thing to look at is the reason this strategy ultimately works, pun intended, no pun intended, whatever. But the reason that this game plan works for strategy in the long run is the basic belief on Saylor, which is high conviction and I believe is 100% true, is that over every 4-year period, Bitcoin makes money. So when strategy is accumulating more and more and more Bitcoin, you'll hear critics say, how can they keep this up? How can they afford to pay out their dividends? How can they afford, what if Bitcoin goes down all the way to $70,000? And Saylor's point on that is Bitcoin's going to go up over a 4-year period. So there's no consideration for strategy in terms of them getting it liquidated or having to sell their Bitcoin. That's not a real thing if you understand what they're actually doing. Now, if you think that Bitcoin's going to go to zero, then that's a problem. Okay. Then you could have a case to say that strategy could be in trouble. Strategy really couldn't get into any trouble unless Bitcoin goes down to like $11,000. I don't think we're anywhere in this situation that we'll ever see Bitcoin down below $15,000 again. And that's how they win. And that's why we love strategy.